So I think we're live.
Yeah, that's right.
It's live now.
Okay, so how has your day been, Kevin?
Thank you so much for joining.
On the side.
I know. Thank you so much for joining us this evening. I'm Cedric, a first-year student majoring in maths, mathematics, and economics at UCLA, and this is Shuje.
Hello, Cedric. Hello, Shuja. Thank you for having me.
We are very honored to be moderating this session this evening. We are to bring our of the series where we invite distinguished professionals from various industries to share with expertise and advice. This time, we are excited to have Mr. Kevin Davies, the Managing Director of Client Coverage at Maybank, and he'll be speaking to us about his experience in the investment banking industry. Davies has served in Maybank for almost 20 years. He joined Maybank in 2000 as a Vice President. He was then appointed as the Director of Client Coverage before his current position, T50. Mr. Davies, we are very grateful to have you here with us today. At any point, if you have any questions, please comment below. Do state your name, year, university, and your study.
Kevin, could you hear us clearly over the Hangout?
Sorry, I didn't hear you there.
Could you hear us clearly over the Hangout?
Yes, I can hear you both.
Hi, Mr. Kevin. You may introduce yourself right now.
Okay. Hi, everyone. My name is Kevin Davies. As the moderators have mentioned, I'm currently the MD client coverage for the Maybank Group, the wholesale banking division of the Maybank Group. I've been with Maybank this is my 18th year now. And I did a brief stint in an audit firm before joining here. Now, obviously, I think I may have to make a small correction. I didn't join as a vice president. That's something I had to actually work my way up to. Like most of you, I joined the bank as an analyst or an officer, and was very lucky to be able to work my way up through the ranks. I've spent a fair bit of time in the corporate finance, the investment banking advisory, the corporate banking divisions, and finally in the last, I would say 7 years, this is my 7th year, in client coverage, which is the relationship management arm of the bank. Happy to take on any questions and any queries or insights you may have, or you may want me to share.
All right, cool. So I think I'll start with the first question. So, Kevin, the typical applicant for any investment banking jobs typically have 1 or 2 experiences interning in the IBs, and they have tons of extracurricular activities. And how do we actually stand out from the rest, besides making sure that we tick all the boxes in the requirement? What else is there to meet? Other than the hard things,
Okay, I mean, that's an interesting question. Just as a way of a brief background, I designed and ran the apprenticeship program for the Maybank Wholesale Banking Division. Some of you may have heard of Maybank's Global Management Apprenticeship Program. That's a very generic program. So I designed, together with our HR department, and operated and ran the program that was designed more for the wholesale banking division, which included investment banking, corporate lending, that side of the business. So, and I made it a point to interview everyone who joined that program. Now, and actually one of the people I interviewed who joined the bank is the person responsible for me being here today, speaking to you all. To answer your question, Cedric, a lot of it will depend on your performance at the interview. I must say the quality of all the candidates, the CVs that come to my table are all first class. All of you are very well educated, very smart, have all done very well. You've very active extracurricular activities. Some of you do social work. I mean, if I compare your CVs to the sort of CVs to the CV I had when I started working and those of my peers, we pale very much in comparison. So at the end of the day, what differentiates one 4.0 CGPA from the other 4.0 CGPA, from the first class from Cambridge or Oxford to the next, it's very, very hard, very, very hard to differentiate. So the individual performance, how you carry yourself at the interview, how engaging you are, your passion, your reason for being in the room. These sound very, very basic things. These sound like very basic things, but you'd be surprised the number of candidates who I meet when I ask them, why are you here? Why do you want this job? They struggle to give a coherent or a cogent answer as to what their desires are. Most of them follow their friends. Most of them follow the trends. Very few can articulate exactly why they want a particular job or want to be in a particular role.
I think the key point is that sometimes you don't focus so much on the technical sides. You probably take it as a given, and the differentiating factor is really the attitude during the interview. So how's the Maybank process like? Was there like a many-to-many interviews somewhere along?
Well, it depends also on your route into the bank. Now, if you're coming in through our graduate training program, it's typically a rigorous interview session where we have all three members of the panel, which I chair, and human resources involved. And if you clear that hurdle, then it's an assessment center that you have to go for. That's more qualitative, a bit of qualitative and quantitative assessments. And assuming you clear that hurdle, then you're onboarded. Sometimes we also have exceptions where people come in direct into the business. They are hired or recruited directly into a business line, either investment banking or different parts of the investment bank. Now, that is a slightly more rigorous because you're expected to be technically aware and competent almost from day one. So if you join our M&A team, for example, that is a 3-stage interview process. And you'll largely be interviewed by your peers. And you'll have to prove a certain degree of technical competence. Whereas if you were to join our, say, equity capital markets department, that is very much a distribution business. So you will have to not just show that you are numerate and you're comfortable with numbers, you'll also have to demonstrate that you're able to articulate your thought process, articulate your findings, your analysis, that sort of thing. So it's not one rule that applies across the board. It would really depend on the type of business and the route that you take in.
So, moving on. How's the culture like in the investment bank, especially Maybank? Is the work-life balance really non-existent, like stereotypes that have been told that if you handle yours, you have to work for change? How has it been like for you or your team members?
I think the concept of a work-life balance is it's an interesting notion. I think you will find that as a junior employee, when you first start off, especially in investment banking, you will have to trade off a lot of life for work. Now, I can sugarcoat that to say that yes, it's not very often. You will have time off, and we try to give you as much work-life balance as possible. And whilst that may be our intent from an employer's perspective, more often than not, especially if you're in very competitive units of the bank, like I said, M&A, advisory, ECM, DCM, those really very intense business units, you will have to expect a trade-off. And especially at the beginning of your career, the expectation is that most people coming into our ranks are prepared to make that trade-off.
So how soon do you expect your fresh grads to make an impact to the team? As in, when we come in, should we focus more on the work that have more visibility or more higher impact? In that sense, yeah, how do you think we should prove that we are able for the job, and before you give more responsibilities to us?
I think as a fresh graduate, as a person just joining any one of the businesses, I think how you integrate into the team, how you integrate into the department is very important. We don't expect you to be subject matter experts overnight, but what we really want to see is your willingness to learn, your attitude when we hand you tasks. For example, I mean, if you're expected to stay late, work over the weekend, how mature you are in dealing with, those sort of moments, how quick you are to ask questions. We want to see, I use the term, we want to see sponge-like mentality, right? Where, you're just waiting to absorb, you're waiting to learn, you're willing to absorb, you're willing to learn, as opposed to some who may just come in and expect to be taught. Because, I mean, we recognize that a lot of you are coming from an academic, you're moving from academia into professional circles, where in academia you are taught. You sit in a classroom, you receive. You're a literal sponge, right? But here you not just have to be a sponge, you have to be an active sponge, right? And you have to ask questions, and you have to engage, and you have to interact with your team, line managers, as well as your superiors.
So the next thing, I think, coming from quite a lot of people from ICMS as well, we are pretty diverse bunch with quite a lot of engineers and also people who might not come from the straight econs background. And how has Maybank been, hiring this sort of graduates from unconventional fields? And in IB itself, what kind of positions do they usually fit into?
I think I'm quite pleased to say that we've been very broad-minded when it comes to these sort of candidates. We've hired people from a legal background, we've hired people from an engineering background. Actually, I would say it's almost 50-50 between those from traditional backgrounds, academic backgrounds, and those from the non-traditional academic backgrounds. I wouldn't say we prefer to hire one particular type of qualification over the other. As I said, what we'd like to see, of course, at a very basic level is a level of, you need to be comfortable with numbers, you need to be numerate. You need not necessarily have to have a degree in maths or finance, but because those are things you can learn. Like one of the best guys that I have working with me currently is a mechanical engineer by training, and another equally good candidate, guy that I have on my team is also a lawyer. So you will find very many diverse backgrounds occupying senior positions in an investment bank.
Okay. So does the demand for this sort of qualifications changes year to year? Like what's the trend now? Is it moving really towards the mechanical engineers, the data analysts, or still pretty qualitative stuff like the social sciences?
Well, I think if you're talking about investment banking specifically, the nature of our business has remained fairly constant. The sort of skill sets required, 5, 10, 15, 20, nearly 20 years ago are largely the skill sets in play today. So I think where we are really where we're really moving to, and how it's sort of evolving or differentiating, is in the quality of the candidates. I started off by saying all of you are smart, all of you are well qualified, all of you come from some of the best universities in the world, right? So it's really, looking for the best of the best. So it's not just whether you're hiring from a finance background or you're hiring from a non-finance background. It's for us to hire the best in either background. So the challenge really now is also for us to identify these top talents regardless of field of study, and to ensure we also place them in the right sort of home. Investment banking as a business is quite broad. We also don't want to put a square peg into a round hole. So those are the sort of hiring challenges or how the hiring process has evolved. It's a lot more about making sure you are comfortable being in a particular business, or you are keen or interested to be in a particular business, rather than saying we have a role available in this department. You're the first person that we're interviewing. You now go and join this department. We don't do that.
Okay.
And you'd be surprised, 15 to 20 years ago, that's exactly kind of how it worked.
So it's about finding the fit, right?
Yes.
And so how is the lateral movement possible among your departments, or even vertically going to another section?
So the Maybank Group is, as most of you would know, it's the largest financial institution in Malaysia. We are also fourth largest in ASEAN. We're 45,000 people strong. We're in more than 20 countries, and we're fairly well spread out in Southeast Asia. Now, when it comes to lateral movements, we like to consider ourselves a very fair bank. It's something we encourage. But again, it's also down to fit and requirements. We don't move people for the sake of moving. And we also don't want you to move without really gaining depth in a particular field. So if, let's say, you join our M&A division, we'd want you to have done a good number of deals, have a good number of deals under your belt, spend a good amount of time there before you then move on to do something else. For people who want to have a taster of different parts of the business, typically we'd encourage them to join our graduate training program, because that allows you to just get to know all the different businesses within the wholesale bank, and then pick one for a longer term stint. Direct hires, typically we want you to have a good amount of experience before you move on to other roles.
So next question from now on are more pertaining to the industry itself. It is that, so given that the profit-driven nature of banking often classifies us as a very lucrative professional field, and at the same time, it is also considered as very highly intellectual, and that's partially the reason why people still stay in the field, despite knowing that they may not make a huge impact towards the society in terms of the, I guess, the societal value. And so, what do you think of that? What do you think is the function of investment banking in the whole, say, even the financial sector, or even broader in the whole economy, Malaysia's economy? How does it facilitate the whole world going around?
In investment banking, as a name or as a terminology, is a misnomer. People always think that we do investments, especially in Malaysia. The less familiar or the less broad-minded will think, oh, you do investments. Can you tell me about investments? And I always have to educate, especially people who are not familiar, maybe some of the older generation, that this is nothing to do, that we don't do, investment banking is a misnomer, we don't invest. We are actually by definition a facilitator, right? So we are an intermediary of sorts. When I say how we're an intermediary, when you talk about M&As, it's matching buyers to sellers. When we talk about capital raising, we're the intermediary. We provide the advisory support. source the market for whether it's debt or equity. When it comes to stockbroking, again, we're matching buyers to sellers. We are for all intents and purposes a facilitator and a financial intermediary. Now, where do we add value? How do we give back to society, as it were? It's very difficult to say it with certainty that we are doing good, as it were. However, we are a critical intermediary because there's still disinformation in the market. We have clients who still need the technical advice, the product support. There may come a point in time, I don't know when, where the market becomes sophisticated enough that people like me lose our jobs. But until that time comes, sellers still feel more comfortable talking to an investment bank. Buyers would still prefer dealing with an investment bank because we provide that objectivity, we have that credibility. And we hold, at least for now, we provide them the market intelligence and the market know-how, as well as the product intelligence and product know-how. We try and give back in the forms of our non-business sort of initiatives, our corporate social responsibility activities. In Malaysia, we're highly regulated, so you will not hear of us. You'll not hear about the Malaysian whale,
Okay.
Who won or lost hundreds of billions or hundreds of millions, or who bankrupted the bank. That's we're too well regulated for that to happen. So there's no risk of us distorting the market or destroying the market to that extent. But we play the role that we play. We make no apology for that. I don't know whether you'd consider all of us intellectuals. We're all just professionals trying to do the best we can and trying to deliver value to our clients. We may not touch the environment or touch the market or touch the country as we would down to the individual, like how a retail banking business would. We don't provide you a mortgage. We will never provide you an education loan. So you'll never see that sort of feel-good value coming out of the sort of businesses that we do. But we do fund large corporations who provide jobs, who pay, in a very simple sense, provide jobs, pay taxes. We facilitate the economic multiplication process, the multiplier process. If that answers your question somewhat.
Okay. Yeah, I think that's a very good answer. And particularly, I pick up on the part where you say we are facilitating in terms of the transfer of information that the buy side, the sell side, they need to know that they're dealing with an expert. And so I think let's say we look at the retail investment scene. Do you feel like the fact that Malaysia is less transparent and less accessible in terms of the, let's say, equity market information? For example, we don't really have a lot of screeners or a lot of research available. And yeah, do you think that has been a deterrent to more Malaysians getting their cash out and putting them into the stock market? The fact that the financial literacy is still pretty low in this country.
Well, actually, it's not a lack of. It's not for a lack of research reports, or it's not for a lack of information. Actually, the problem is there is enough information. I think we have a very active research house as well. I think the problem is the amount of data that's available doesn't necessarily reach the end user. If I am a mom and pop investor, unless I have friends or contacts or I've signed up for a particular service, I would not be able to avail myself of that sort of data. And then I'm reliant on either going online, going to the Malaysian Stock Exchange, who sometimes carry reports. So it requires a lot of initiative on my part. Now, a passive or a retail investor, a less sophisticated investor, would not go to such extents. But I think when it comes to participation in the retail participation in the stock market, I think we will probably not see the sort of levels of activity that we saw 20 years ago. Where
20 years ago it was higher.
20 years ago, everybody and his second cousin and his dog was in the stock market.
Okay.
Right? You know, from your security guard to your driver to your gardener would be familiar. But that was not because they were necessarily financially literate. It was just that was the thing to do. That was the market. You know, everyone was. It was almost a get-rich scheme that everyone participated in because everyone was literally getting rich quickly. You fast forward 20 years, we've been through two financial crises, and people are a lot wiser, and also I think people are a lot warier of the risks involved in equity investing. So you kind of have weeded out all these, you know, the big players, the coffee shop owners, the drivers, the gardeners, and you are now really looking at people who are probably a bit more literate, still not fully financially literate, just maybe a bit more literate, and who can appreciate the risks involved in equity investing. You would have seen a marked shift over the last 20 years from, say, equity, which is a more liquid investment, into probably more traditional, safer investments like real estate. So at a personal level, that's what I've seen a lot of how money, the flow of funds, personal funds have gone. The more sophisticated, the more literate will always have a diverse portfolio and will allocate money to the stock market. The ones who are less so have shifted away from the equity markets, even though it's more liquid, and have moved into the safer traditional investments like real estate.
And I think partly it does stem from the public low confidence towards the market stability. And on top of that, I just want to know, the regulatory climate of banking has made it a norm that we must always regulate, and only to realize that there are actually more loopholes here and there to patch because of how, say, the financial technology has been moving much quicker than the law. And so if it's up to you, from a perspective, what are you seeing that what could be the next thing that brought upon the next recession or even the next huge financial crisis? Is there anything that Malaysians are not prepared against, any sort of risks in the market?
I think, truth be told, we have matured a lot as an economy from post 97. I think that's probably when, as a country, as an economy, we took the biggest hit. You realize, or you may know, that in 08 and 09, at the last financial crisis, Malaysia was largely insulated because, for better or worse, all those sophisticated structured products were not the norm in Malaysia. It was not normal for banks to package a basket of less than ideal securities and then or assets and then try and sell them to the market at large. We never had that. We were still fairly traditional, fairly conventional, so we remained isolated. Now you fast forward nearly another 10 years, and what you're seeing here in Malaysia is no different. It's a more macroeconomic. It's more macroeconomic factors that is driving the stagnation. But having said that, we see a lot of activity in Malaysia. All of you would have read about the level of Chinese investment in the country now, from mainland China. So we see a lot of activity in that front. We see a lot of infrastructure development, which has always been a Malaysian mainstay in terms of how we prime or jumpstart the economy. I think the only battle that we face on a day-to-day basis now is costs. Cost of living has.
You mean inflation? When you say
Yes,
cost,
yeah. So I use a broad term. So I mean, inflation has affected almost everyone. No one is insulated. The GST, although it is a welcome addition in terms of broadening the tax-paying pool, unfortunately, it was not matched with personal income tax reductions. So it is to a lot of people, especially the middle class. It's a double whammy.
The double whammy. All right. So in terms of the so do you think this is for my audience question, but do you think say shadow banking and insider trading, these two are problem in Malaysia's banking system? I noted that you mentioned Malaysia is not that developed, but do the same things um, that people pick up in the US securities fraud happen in Malaysia as well? Yeah, and shadow banking.
Yeah, I mean, I think, well, we have many cases of fraud, corporate fraud, and I think there's no running away from that. If someone has the intent to defraud, they will find a way. Uh, However, I guess perhaps the level of sophistication may be a bit more muted here in KL. Insider trading is something that we grapple with all the time because you're dealing with information and the flow of information. Uh, we hear of cases, people being hauled up. Just recently, a week ago, one of our top corporate tycoons, his charge was amended from a criminal charge to a civil charge for insider trading. And I think insider trading in its current form, I think that will remain. Where anyone feels that there is an opportunity to make easy money, intention to do so, they will. But shadow banking, I think that's perhaps something that's not quite an issue here for us. Asians value trust very highly, so they want to deal with trusted systems and trusted institutions. Until they want to do something a bit dodgy, then maybe the sort of infrastructure will become more apparent.
There's a thought on my head. I also read that Maybank has some expansion in Indonesia and CIMB doing the same thing. So are you guys bringing investment banking services into Southeast Asia already, or are you still starting out with just custom retail banking, consumer side kind of services?
Sorry. I didn't quite catch that question. Can you say that again?
Yeah. So let me just say again. It is that I was reading that Maybank and CIMB are venturing into Southeast Asia, say I think Indonesia, for the market there. Are you guys bringing investment banking services in the region already, or are you still focused on?
Right. Okay. Sorry. So yes, I think both Maybank and CIMB, well, probably more Maybank, we have designated our playground, so to speak, and we've said that ASEAN or Southeast Asia is our designated playground. We are, as I said, the largest bank in Malaysia, and we're fourth largest in ASEAN after the three Singapore banks. Now, 6 years ago, we acquired a regional investment banking franchise called Kim Eng. And so if you look at our investment banking business, the actual name is Maybank Kim Eng. We have a presence here, obviously in Kuala Lumpur, in Singapore, Thailand, Indonesia, Philippines, Indochina. If I missed anything out, I think we're pretty much everywhere in ASEAN. So yes, so when we demarcate Southeast Asia as our area of focus, we also have to ensure that we have investment banking franchise there to support the sort of corporate activity that we do. In a handful of isolated places, we may be more retail banking focused, purely because of regulations. But investment banking or advisory is such that you just need to have a center of excellence or a hub. That can be either Kuala Lumpur or even Singapore. And you'd hear of suitcase bankers who then just fly all over the region, engaging with clients and doing deals.
Okay. I think I'll just pass on to Cedric at this time, because we do have some audiences who have asked questions.
Sure.
Yeah. Cedric, it's your turn.
All right. So this is something related more with like Zuhan, a second-year student at UCL. So the question is, what are the most effective charting tools when you stock charts?
Sorry, you're breaking up, Cedric. Can you repeat that?
Yes. This is a question by Zuhan Ong, UCL second year. So the question is, what are the few most effective charting tools?
Okay, so I think he was
Sorry,
asking from the most effective charting tools to read share prices. Just asking.
So the most effective tool to read, effective charting tool to read the stock market, is that correct?
Yeah, that's right.
Okay, sorry, I'm afraid I wouldn't know because I am prohibited from trading in shares because of the nature of my work.
How does the conflict of interest work in your case? You can't trade anywhere in the world, or?
Yeah, well, actually, I mean, truth be told, I can trade, but I'll probably have to fill in about 200 forms and get about 300 people to sign off before I can buy a single share. So,
Okay.
So most of us, just to make our lives less complicated, we refrain from trading. But if you want, you can send me that question, email it to me, and I will get someone from my broking business to take a stab at it.
Okay. Cool. Right. And the next question is from Yong Dun He. He's an incoming year 2 major of accounting and finance in the University of Hong Kong. So local companies in Southeast Asia have started to launch their IPOs in the home countries instead of flocking and trying to IPO in Singapore. So do you think the Jakarta and Bangkok will become the next largest IPO markets in Southeast Asia? Are they going to continue attracting big equities? Singapore somehow retain the advantage. How do you see the long-term trend play out?
Right. So, yes, I mean, Singapore has been the traditional ASEAN hub for the big mega IPOs or the power listings for the region. However, what we also value now, and the sort of advice I give my clients is, it's not about the big IPO where you make the big money at the listing and the major shareholder or the company walks away with the desired amount of cash. Aftermarket performance is also important. How sustainable is the stock price in the immediate term, medium term, and long term? Now, that typically comes with familiarity, activity, growth. Investors want to feel that they have a degree of familiarity with the business. They want to feel that the business is growing, and the visibility and the growth trajectory have to match. If you're say a Malaysian property developer, for example, and all your businesses are all your projects are in, say, Kuala Lumpur, why would you want to list in Bangkok? Why would you list in Jakarta? Potentially, you may get a better valuation at the onset, at the point of your IPO, but you're inherently a Malaysian domestic play. The familiarity, your growth story, your growth trajectory would probably be better appreciated in your home markets. So, and that example I can use for almost any jurisdiction, because I think market hype alone is not going to carry an IPO. It may get you listed, but it's not going to sustain.
Right. But so some of the, say, somehow like Alibaba going to the US, or I think the Saudi Aramco, the Saudi Arabia oil fund is also trying to IPO in overseas. So do you think in that case it's actually that going overseas gives them more exposure, more visibility, and perhaps there's better support compared to home country?
Yeah, I mean, I think in Saudi Aramco's case, it's a very clear cut. It's very clear cut because their home market is not a developed It's not a developed enough equity market, right? And they're trying to bring money into the system rather than just recycle liquidity within. I mean, the Saudi government has more than enough liquidity to buy up, or Saudi funds have more than enough liquidity to buy up the IPO. They're trying to attract fresh money into the system. Hence, you go to the US or wherever. Similarly, for Alibaba, it's all about bringing fresh capital in. So, if you feel that your business is, I guess, broad-based enough and has enough demand, and mind you, in North America, you have multitude of hedge funds, private equity funds who all have liquidity to deploy, and probably don't have enough sort of assets that they can invest in. Southeast Asia has its own captive liquidity market. Malaysia, Singapore, Thailand, and unfortunately, fortunately or unfortunately, they tend to be more domestic focused. You will very rarely see Malaysian liquidity going into Singapore. You may see some Singapore liquidity coming into Malaysia, but not in the sort of size and scale. And I think before you see, say, for example, Malaysian money going out, Malaysian money in Malaysia, you need to see ASEAN money coming in. And at this juncture, we don't see that being a very active or commonplace sort of activity.
So, next question. Let's see. Just wondering, how's the day-to-day like as a client coverage at your level or the first level executives level? Does it differ a lot? Do you take on more responsibilities as the director, as the manager?
Well, I mean, I think the typical career progression for someone in investment banking, and particularly someone who may end up in, say, a coverage role, you need to have spent time in a product function first. So we typically discourage fresh graduates from being in a coverage function, because a coverage function is a lot of breadth, because you are managing a portfolio of clients, you are managing them across a suite of products. And as an originator, you typically tend to originate, and then the execution, implementation, and closing of deals is usually done by your product partners. So we don't encourage a junior person to join this function, because you may only have a very you'll have a light touch across all the different different products. As a junior person, we encourage you to have depth. So if you were to join, say, our M&A or corporate finance or equity capital markets, debt capital markets departments, your average day would typically be, as a junior hire, truth be told, you'll be behind the desk, typing away at your laptop, doing a lot of research, helping do a lot of data analysis, crunching numbers, working on models. Not too different from what an analyst would be doing in an international investment bank. Now, once you gain a degree of proficiency, technical proficiency, then as you move, say, into your anywhere from your third to fifth year, you'll move into a more managerial function. That's when probably you'll have your first taste of client interaction, where you sit in on meetings. You may lead smaller transactions, and you'll be perhaps an interface with working levels at whichever client that you're mandated for. As you move up the ranks, you perhaps spend less time in the office. In almost any function, whether you're product or coverage, once you move to a VP type function, your expectation is that you're out there in the market, you're engaging with clients, you're having discussions, you're either originating or problem solving or executing. And until you reach, say, perhaps an MD level, where you don't know, like for me, I don't know whether I'm coming or going, and I just go where my diary tells me I just be where my diary tells me to be. because then it becomes just managing an ecosystem.
Okay. Got it. So next question, also from Dunha. So Bank Negara apparently do not offer hedge fund license in Malaysia.
No.
So what is the reason behind this restriction to set up a hedge fund?
I think broadly, and I think this is not necessarily related to just Bank Negara or directly related to Bank Negara. We have a lot of investor protection as a guide, sort of like a guiding principle. So when I say investor protection, everyone is part and parcel of the investor protection landscape, from the central bank, from the stock exchange, from the Securities Commission, the Companies Commission. So, which is a good thing in the sense that the average investor in either an equity or a debt product can rest assured that he's well protected. So, to that end, intermediaries such as ourselves, banks, and even right now to boutique advisory firms, all need to be licensed. And the level of scrutiny that you go through to get a license is very high. Hedge funds, I guess, maybe they come with a reputation, deserved or otherwise. They come with a reputation. And given how the Malaysian regulatory approach to investor protection, perhaps the market needs to evolve a bit further before you see this being a bit more commonplace. You look at it even from the context of private equity firms. We don't have that many. We have a handful, and we have a handful of the big regional names who are very active in very particular spaces, because they also don't want to compete with the big boys, because there's ample liquidity in the region. So they either pick, FMCG, they pick the retail market, and they invest there, or they co-invest there. So I think we are maybe a good 5 years away, hopefully, before you see a lot more, before you see some hedge fund activity or hedge funds being licensed to provide services or to invest here.
And I think looking at the audience question, it also links very well with a question from Terry. He's a civil engineer, first year student based in UCL. The fact that on one hand, the fact that we were behind in terms of the development of financial products have insulated us from the security risk, but at the same time, it can also hold back on quite a lot of progress, the liquidity side as well. So how ready is Malaysia's infrastructure? How prepared are we to meet this sort of future change? And how do you think when it comes, how well are we going to adapt to it?
I think a lot of it will boil down to the man on the street. Today, if the man on the street loses money through a forex scheme, or he loses money on a particular stock, the first thing he does is he runs to the regulator and he lodges a complaint.
Okay.
Right? And then you see the regulator get involved, you see the police get involved, arrests are made. So it is the concept of caveat emptor, or buyer beware, is still not something that I would say first in mind for a lot of the investors, because the sophisticated investors, the institutional investors, they have no issue. But it is still very much the man on the street who is affected, and unfortunately, regulations largely the end effect or the end beneficiary is the man on the street. So until we are prepared, I suppose, as an industry, to let perhaps the man on the street lose money and say, well, that's why we have disclosures and disclaimers. Perhaps only then will you see this becoming more commonplace. I think where hedge funds will eventually find their space is in specific segments, and I probably see Bank Negara allowing them to come in over time not just bank negara, regulators as a whole, allowing the more sophisticated type of either be it product, intermediary, or service provider come in, is in designated spaces, designated sectors. And I see it as an inevitability. So it's probably a case of when rather than if. There was a time where foreign banks didn't get banking licenses in Malaysia. Now they do. And it's become reciprocal. So these things are a matter of course.
Right. So so I guess the major takeaway was that the consumer also needs to be educated about the risks and that's inherent in all these activities. Right. So the next question is from another student from Hong Kong, from the Chinese University of Hong Kong, Year 3. Her name's Sia. So as a student studying abroad, she often encounters problems where the same bank operate in different countries, do not actually provide international fund transfer even internally, and they have a lack of understanding about their branches in another country. So what do you think of this sort of issue where people in different branches in different countries are working in silos?
Yeah, I have encountered at a personal level. I've encountered this before, and I also know of other individuals and clients who do. I mean, largely this I would think is more of a system-driven limitation, where as different units operating in different jurisdictions, systems tend not to talk, and I think the more regional banks, or the banks who've operated regionally or globally for longer, they have a more established infrastructure or system or a network of systems that allow everything to talk to each other. So if you try to do something with a HSBC or a Standard Chartered, the flow of funds, the service levels between one country to another tends to be the same. But I think for banks, say like the Maybanks of the world, where we're moving into we are a regional franchise, you may find that to be less smooth than say a more established bank. But again, these are all things that you will see fix itself over time, because we can't, as a banking franchise, whether it's Maybank or any other bank, you can't afford to not have that sort of seamless flow of funds or seamless interaction or the seamless connectivity. So I would say this is again, without trying to repeat myself, it is again something that you will see things sort of converge over time.
Okay.
But it is largely a system-driven problem.
Right. So next question. This from Matthias Lee. He is a student from University of British Columbia, majoring in mathematics. So given that the Chinese companies have invested quite a lot in Johor and other regions of Malaysia, do you see the banking sector as well be disrupted by the foreign investors?
Well, I mean, Chinese, I presume he means Chinese banks or foreign banks setting up in here in Malaysia. We already have a few active banks. Of course, we have the traditional foreign banks, the HSBCs, the Standard Chartered of the world, as well as the Singaporean banks who've been here for a long time. Chinese banks in particular, yes, China Construction Bank just launched, I think a couple of months ago here. Bank of China has been here for a while. ICBC has also been here. Now, they are still very much a big player in the sense of corporate Malaysia as a whole. So they participate in loan syndications, they do small bilateral loans, but they are a welcome addition, but they are not yet a powerhouse in the market. Where we see them probably being more active is, as he mentioned, with Chinese corporates that are here. They tend to be, of course, they have the familiarity. We would expect no less. I think if Malaysian clients went overseas and if there was a Maybank there, we would expect Maybank to play the same role. I think so for us, we work alongside them on a few deals. They're good partners to have. And I think diversity in any sort of landscape, if it's for productive reasons, I think we all embrace it.
Right. So, sorry. Yeah. So I guess the entries of complement your presence
Yes.
instead of compete. Yes. And I just try to end this with two more questions, two quick fire questions. One is from Jason. He's an engineer graduate from University of Manchester, and he's just wondering, what's your view on the sustainability of the fiat currency system, and how? Because the bigger question now is that how does cryptocurrency factor into the payment system, especially in Malaysia? Do you see it happening in the near future?
I suppose there are two aspects to this, right? There's the retail side of the landscape, and then there's of course the wholesale banking side or the corporate side of it. I don't see the way the system is set up for wholesale banking changing. I don't see corporate deals being structured where consideration is denominated in bitcoins or any other type of cryptocurrency. But perhaps as a retail consumer, as an end user, as an individual, I don't preclude, because that's not something that anyone can govern.
Okay.
So, but I guess from an investment banking or a corporate lending or from a corporate perspective, I see the status quo to continue.
Okay. So right. And last thing before we end, so how would you advise? If there's one takeaway, one advice you want us to end this call with, how would you? What's your wise words for us who's starting work, or for us who's still in the university? Yeah, in terms of our career of the future.
So I think what I started off by saying that at the end of the day, it's down to you as individuals. I think a lot of you are going to either come back to Malaysia or start your employment once you finish your education with very, very strong credentials. I just probably want to add that credentials alone are probably not going to be enough. I'd like to urge all of you to work on your interpersonal skills, your personal confidence, your ability to engage in broad level conversations, not just on your subject of study, but have a worldview. We want, as employers, we want to see broad-minded individuals, and we also want to meet very dynamic people. Continue to push yourselves, not just academically, but outside your outside interests as well. We don't want the traditional bookworm type candidates, and I'm not suggesting any of you are, but I'm just saying that we want to see those of you with very diverse interests. So, and on that note, I'd probably wish all of you all the best.
Advice well taken. I think so. Really, thanks a lot. I think on behalf of the whole ICMS audience, Cedric and I just want to thank you, Mr. Kevin, for giving us the opportunity to listen in to one of the most established person in this banking industry, and I really hope that the audiences have taken away a lot of insights from the banking world.
It's my pleasure. Thank you for having me.
Sorry. Yeah, thank you. And if there's nothing else, I think we'll end the call here. Okay, hopefully we'll keep in touch with you.
Yes,
Yeah.
sure. No problem. You all have a good day.
You too. Right. Let's go off.